So if you're dreaming of building your own home from the ground up, you're likely exploring the exciting possibilities that comes with creating a space that's tailored to your unique desires and needs. But before you even break ground, you need to understand the financial side of things, specifically when it comes to construction loans and what they all entail. So whether you're searching for the perfect land or you already own the land itself, this video will break down everything that you need to know in order to build your home in 2026. Now let's get into it. So a construction loan, it's a loan that's used to build a home from the ground up. You can finance all of the costs to build into one single loan. And the money is released in stages as the build continues to progress. And the main difference between doing a traditional loan versus doing a construction loan is, number one, construction loans, traditional loans, the home is already built and done and the bank funds the home. Construction loans, because the home is not built, they normally have a lot stricter guidelines because it's a higher risk for the banks. And there's really different types of construction loans. The two major types of loans is, number one is if you don't already own the land, you can combine the land purchase plus the construction cost into one single loan. Or if you already have the land itself and already own it, then you can do just a construction loan to build the home on top of that land. And here's what the construction loan covers in terms of cost. So what it does cover is going to be the land purchase, any construction labor, also any building materials as well, any permits or any required fees, anything that's required during the build phase, you can roll it into this loan. Now, what it does not cover is upfront any architectural designs, any of the drafting plans, pretty much anything pre-built fees, it's not going to be included in this loan. And the reason why this matters is because the lenders, before they give you the money for the construction loans, they're going to want to see these plans. They're also going to want to look at the full cost of the budget and the totals. And if you do not have any of these plans, then you will not get loan approval and the loan won't move along. And here's overall how it works. So on the day of closing, if you are purchasing the land as well, then the seller is going to get funded for the land. Then the remaining funds for the construction loan is going to get held in what's called an escrow account. And the money gets released in stages as the build progresses. And the overall timeline is you have 11 months to complete the build. If you go over that timeline, then they will start charging you fees. So you want to make sure you fully communicate this with the builder up front. And then during the build, the construction phase, you're only paying interest on the amount of money that you're drawing. You're not paying interest on the total amount. And then once the home is complete, it automatically converts to a traditional mortgage, a 30-year fixed, and that's when you'll start making payments on the total amount. And here's how the draws work, or here's how you get the money. So again, you're not going to get the money up front in a lump sum. The money is gradually released in phases, and it's paid directly towards the build cost. So it's not going to come directly to your hands. It's going to be paid to the actual builder itself. And again, it's paid in stages. So each phase unlocks the money, and it's based on progress. And it's also based on milestones as well. So let's say you're done with the foundation, you can take a draw. Let's say you're done with framing, you can take a draw. It's based on how the progress of the build is going. And the benefit of this loan is you're only making interest-only payments, so you're not paying on the full loan during the time of the construction. And it's based on what's already used. So if you have not made a draw, then no payment is needed. And if there's any delays, that will also decrease your payments. Because again, if there's no balance, there's going to be no payment as well. And when the draws start, that's when the payment starts. And the payment will increase as the build progresses. And during the build phase, there's going to be several inspections that's going to be required because the lenders send the inspectors. They want to make sure that the home is on progress, the work is being completed, and it really is there to protect the lender plus you as well to make sure the home is being built up to code. And also you want to expect multiple check-ins. A lot of times they will send it after each draw period as well. And then at the end, an appraisal will come out to look at the entire house to make sure everything is done correctly. And there's really two major types of loans. Number one, you have the one-time close loan, which combines the land purchase plus the construction cost all into one single loan. And two, you have a construction to permanent loan, which this is for those that already own the land, and you can use the equity in the land as a down payment to cover the down payment for the construction cost. So these two loans, they work the same way, but where they're different is one, you're combining the land purchase, the other one, you already own the land. And here are the requirements for the one-time close loan. When it comes to down payment, if you're building it for your primary residence, minimum down payment is 5%, and it's based on the total loan amount, so the land purchase plus the construction cost. Then when it comes to credit score, you'll need at least a 700 credit score. However, if you're doing a VA loan, they will allow a lower credit score than 700. And the banks requires, so upfront, you'll want to get pre-approved so you know the total amount that you can borrow. And then the builder will need to get approved with the bank, and also the project plans and budget will need to get approved as well. And here's some of the benefits when it comes to this loan is you have low down payment options. So again, minimum down payment is 5%. If you're doing a VA one-time construction loan, it's 0%. And if you're building an investment property, then it's 20%. And you'll also only need to have one closing when you're combining the land and the construction costs. So it's a lot more cost effective because you're only paying closing costs one time, as opposed to if you bought the land separately and then built, you'll have to pay closing costs when you purchase the land and when you do the construction loan as well. And you'll also only need to get approved one time. So you'll only need to qualify one time up front. You don't need to qualify once the home is complete as well. It's just one time up front. And when it comes to getting a land loan, a lot of times they're really hard to finance because there's very limited banks that offer these types of loans. Also, a lot of times they want a large down payment, anywhere from 40 to 50%. And then on top of that, they want you to have what we call reserves, which is extra money that you have set aside after that down payment. And usually they have very strict guidelines. And that's where this alternative, the one-time construction loan, can come into play, because you can combine that land purchase plus the construction. The only thing is you must build on that land within 11 months. So here's how to apply. So you want to get pre-approved up front, and you want to work with a mortgage broker like myself that has access to the loan and also experience doing this type of loan. And two, you'll want to know your budget up front and know how much your buying power is for the total amount that you have to work with. And then number two, then you'll want to start working with a builder, and they're going to start working on the designs, plans, and budgets. And also we'll want to get pre-approved. We'll want to get the builder approved with the bank as well. And then the next step is to find the land. So you'll start looking for land. Now, if you already own the land itself and want to build on that land, that's when the actual loan process starts. So if you're planning to build a house and want to know how much your buying power is, click on the link in the description, schedule a call, and I'll be in touch.